5K everyone's calling for.
Yeah.
Um, I reckon we bottom out by then because at the end of the day, we're gonna have a pump in the middle of January. So yeah, I don't think it's gonna be too crazy of a pump, but I do think it'll be at least another like 10% move on BTC.
But I think go back and test like 6 digits again, and then
Yeah.
decide from there whether we hold or not.
Yeah.
Um,
I'm interested to see how the MicroStrategy situation plays out. I know their stock has been on a dip.
yeah,
That could be another like Luna FTX
yeah.
situation.
I was gonna say, do you reckon they're gonna liquidate Sailor at some point?
Yeah. Maybe.
Um, appearance great. We'll start with Dixie guys like usual, and then we'll work our way down. If you guys have any coins, put in chat a bit later. If you put it now, I might miss it. But I will just take a look at what looks good, what looks overextended, what looks ready to go back up to the upside. Let's take a look together. Um, let's look at Dixie. Look at the first. Actually, wait, let's get the 12 months since we're going to get closer to that. Okay, yeah, that's fine. Dixie is still, if you guys watched last week's video, the Christmas Eve stream we did on Tuesday a week ago, Dixie was breaking above the actual external, like the next external that we hadn't tested yet. Right? Dixie was breaking above that. And with the weekly close, and even with what's happening on the daily as we speak, we are consolidating above the said resistance level. Right? So if we keep consolidating above here, I would still think that the next proper target for Dixie would be somewhere around 109 to 110. But like we mentioned last week, we still do have this area right over here between 108.541 to 108.722. Right, this area right over here. This needs to be flipped if we are to go higher. If we keep projecting off this area, this could very well just be another deviation, which takes us back to the downside. Right? And that is, if you are bullish, if you're heavy into alts, if you want alt season to come ASAP, that is what you want to see. You want to see rejection, and then Dixie just going back down again. Right? You want to see a red Dixie for the euphoric alt season where everything's just popping off like 60% on the day. You want Dixie to be absolutely pressured. As long as we're holding this level of support, that's not going to be the case. Right? So as long as we're holding this as support, we chop some more. There's going to be, moves up, moves back down, moves up, moves back down. It's going to be a very choppy market until one side gives a very clear bias on, okay, are we going to break out from here? Or are we going to, go back down and actually go back down towards the range, go back down towards range lows, and maybe even, break these range lows and put a new low in before, chopping around again and maybe going back to the upside further on into the actual bear period of the crypto. Right, so as long as we're above this, um, I would not be expecting a euphoric ultron as long as we're above this. But again, if we start to break down, start to turn these areas back into resistance, right? So for example, we have this level right over here on the daily area where buyers were active, sellers took control back from the buyers. Now you have attempt to get above. If you go down and reconfirm this area's resistance, once again, you've got the inverted smiley going on. You'll have distributive structure start to be put in, and we can start building a case for why Dixie could then progress on going lower. Right. Until that happens, for now anyway, I don't see any bearishness of the Dixie. We need structure to change before I actually give a bearish call on the Dixie. The structures right now are still very, very bullish on Dixie. So again, nothing much has changed since like the last couple of weeks. We looked at it, just an update, right? Because it's good to update these things at least once a week. So that's the Dixie. Next, we'll move on to USDT dominance. USDT dominance has had a nice little pop back up into this area we're talking about, right? So we were talking about this red box, we were talking about this blue zone right over here, your diagonal demand, and your horizontal, right? You've gone back up, and for now, you've regarded what was once support as resistance, right? So it was resistance in the past. tempted to be flipping the support, but then you once again got this area to resistance. And this is very, very good for us because again, we want a bearish USDT dominance chart. We want a bearish USDT plus USDC dominance chart to really get that inverse correlation built up, right? This is bearish. That's going to be good for you if you're actually trying to enter crypto. If this is bullish, then you have an argument for, okay, why would we maybe chop or maybe go a bit lower on Bitcoin and cryptocurrencies as a whole? Inverse correlation, right? As long as we are rejecting from this area, and by the time the 12-month closes later, I want us to be below 4.35%, right? Um, but if we are below this area, the argument for downside increases, right? It exponentially increases because you can take a look on any sort of high, even on the 6 months, if you take a look. If you close below here, then going into the new year, going into the new month, going into the new week, next week, right? So on and so forth, we're going to be treating these areas as resistance, not supports, right? And it's very simple, but it's very effective because if we close above, then buyers have the chance to step in at these levels to hold this as a floor, which has a higher chance of propelling USDT dominance higher. Right? But if you close below, then that's just extra work that the buyers are going to need to put in to overcome this area that's going to be acting as resistance now rather than support. So for the 12 months, close later, right? In 11 hours, 22 minutes, I want us to close below 4.35%. Right? Ideal scenario, close below 4.35%, close below this blue box. Okay. If that was to happen, I would think, going into January, going into the new year, we'd probably get some sort of relief pump back on BTC, get a pump across the board on crypto on alts, right? Um, and whether we get a continuation to fresh all-time highs or whether it's just a relief pump that puts in a weekly lower high, that's something we'll have to see as it comes. But closing below this gives us a chance of catching a relief pump. If we close above this and this ends up being support now going into the new year, that just increases the likelihood of this going higher. And again, if you're bullish on crypto, you don't want USDT dominance going higher. You want that to go lower, right? You want people spending their USDT to buy cryptocurrencies. You don't want people selling their cryptocurrencies to get into USDT. That's not going to give you the buying pressure needed to really pump these, BTC, alts, whatever you're looking at, to really pump them to new highs or pump them to the next resistance level, so on and so forth. Right? So far, this is looking good. Pump back up, rejection. I really want us to lose this blue zone. And euphoria comes in my opinion, once this red line is lost. Right. So we talked about this on the Christmas Eve stream. We have one tap, two tap. So now we have a area which is basically quote unquote, let's say an extreme. Right. So this blue zone is tailor fitted so that you have as many taps as possible. But in terms of an extreme, the next extreme you have is just this one tap, this two tap, and then the projection you get from that. Right? So you lose that, then in terms of diagonals, the next extreme you have is literally from this tap to this tap. And in terms of a market top, this could very well be a potential target, right? You've got external liquidity, depending on when the market tops out, let's say, somewhere around April, May-ish, 1.55%. We've got external liquidity lining up with the area. It's a confluential level that has multiple different confluences, right? So I think euphoria comes in and, the massive green candles start coming in on your altcoins um, once we lose this red line, right? Until then, maybe some more chop until, market makers are ready. And if we reclaim this, then I think higher on USDT dominance, I lower on Bitcoin and cryptocurrencies. But that's only if we start to reclaim this. And more importantly, we reclaim a 4.94%. You guys know I love the mid, right? 0.5%, the 6-month seller zone. On the 6 months, if you take a look, the reason I've got this area marked out between the 0 and the 1, in the 6 months, I write over here. Let me check the 12 months actually. No, 6 months is better. Yeah. On the 6 months, this is an area where sellers at one point were in complete control. You can see that 1 week, 2 week, 3 week, 3 different 6-month candles. Buyers attempted to trade within this area, but then this is the area where buyers couldn't close any kind of bodies on this higher time frame, right? And then you get the breakouts. And now on the retest, you are underneath this. So we wanted this to be a failed retest. And that is what we want. And ultimately, we want some sort of massive distributive structure to play out here to give us those lows before, for the next bear market, we rally up again higher, right? But as long as we're below using this area here, right, between 4.35 and 4.94%. And this is on the macro. Now, this is on the higher time frame. Think weekly, monthly, right? As long as we are using this area as resistance, ultimately, again, I think lower new highs on many on Bitcoin, new highs on of these alts are popping off like Sui, like Say, so on and so forth, right? New highs on many of these alts, and just green across the board, right? But the only three key levels that I'm watching right now: 5.53%, 4.94%, 4.35%. On the higher time frame, we need, especially the zero point 0.5 and the zero, we need that to be resistance. We cannot flip that into support. You break up, start flipping this into support. I wouldn't be surprised if you went and challenged this blue box up here again. Right? You went up all the way to 6%, 7%. I won't be surprised. And then get another rejection on the higher time frame before maybe getting a delayed cycle scenario. Right? That could be a possibility. But that's going to depend entirely on which side shows control around these levels that we see, right? 4.35, 4.94, 5.53. But for right now, for the 12-month close that's coming up, right, in 11 hours, 18 minutes, I would want us to close below 4.35%. Okay, that's the line in the sand for me right now. So let's see what happens within the next 12 hours, basically. Correlate that with USDT plus USDC dominance, and we have, again, this M shape is still, a possibility. Of course, again, this just because the M shape said doesn't mean it needs to play out. But we do have a 414, a 768, and 886, right? The 886 is around 2.80%. For me, this M-shaped bottoming out is going to line up with when I think the market's going to top. Okay, so hopefully this does play out because it'd be absolutely beautiful if it did play out. But even if it doesn't, we can at least keep it here as an idea for now, right? But I think eventually get that drive down. And once we hit the 886, that doesn't necessarily mean that's going to be the bottom, right? We could new, even lower perhaps, right? Maybe. But what I want to see once we get here to validate this M shape is what if that's a if we get here, right? I want to see, of course, now buyers stepping in, right? Bullish formation basically, right? I want to see local double bottom starting to heal. I want to see daily, weekly bullish divergences start to build. SFPs to the downside, so attempt from sellers to take control, but buyers taking control back. If all those signs start to come in, then for me, I'm going to be top perhaps can be very, very close. Because once you get a completed M shape like this, right, a very, very completed M shape, that's been in the making since, let's say, 2019, right? So God knows when this is going to complete. But once it does complete, for me, that's going to be a multi-year M shape, right? I'm going to take that very, very seriously. And again, if this bottoms out and the M shape holds, because this is a bullish harmonic, if that holds and this starts to go back up, that's going to correlate to a market-wide dump on the crypto. Because again, this is USDT plus USDC dominance, right? The two biggest stablecoin providers that we have. So this stays bullish and this starts to go up. That's going to be, in my opinion, a very, very good sign of you to just take profits, head short. And I'm not talking like, on the 4 hours. I'm talking like this is now perhaps the top is in kind of mindset, right? Buyers start to show strength here. What you could get is perhaps your first move up once the low is formed in. Perhaps the first move up is going to give you a type 1, right? Which could correlate to your first, let's say, 40-50% dump on Bitcoin. And maybe you come back down for a type 2, put like a higher low in, right? And then from there, perhaps you actually go on your bigger run, right? Just literally going off a traditional harmonic framework. Right? If something like this were to happen, this would correlate with a very similar situation to what we got last bull run, where Bitcoin first dropped about 50%, right? And the scenario I'm talking about again is right over here. So if you take a look, I'm talking about this, right? The first proper big drop on Bitcoin, followed by a pump back up that gave you weekly, monthly bearish divergences, and then your macro crash, right? So the type 1 in USDT plus USDC dominant chart could give you this pullback here. And then the type 2 is where you get this massive dump. So something like that could happen. I'm literally just throwing out ideas here. That this might not even end up hitting, but it's good to have some sort of framework, some sort of areas on the chart for you to actually base triggers around. And for me, this would be a very, very good trigger if buyers went and validated this area. If not, then it's what it is, right? The wave structures didn't play out. We don't take it seriously. But if once you go here, buy, start validating, and good structure starts to come in, I'm going to be very cautious as to, okay, I think I'm going to exit heavily on spots. I'm going to exit heavily across all my leverage swings, and then I'm going to just start building swing shorts instead. Right, the exact opposite of what we've been doing for the last couple of years, which is building swing longs. So that's USDT plus USDC dominance. So next, let's move on to Bitcoin dominance. So Bitcoin dominance is, one sec, why is this not working? Here we go. With Bitcoin dominance, we are, let me turn this off for now. We are putting in distributive structure. We identified this a little bit ago. We were saying if we get this breakdown and then an inverted smiley, then that could signal the top for this, move up we've had on Bitcoin dominance. And so far, we are getting the inverted smiley. So you have initial resistance right over here, your radon liquidity, basically area that was deviation right over there. And then you have reconfirmation of what was once resistance as resistance right over here again. All we need is a follow through in the sense of we need to close below 0.34. Right? I want to close below the golden pocket. So we've had a very, very nice rejection off the 382, 59.95%. I want to go and see a close below this area here next, 57.24, right? I just want to go and confirm the whole zone, right? Not just a part of the zone, but get a high time frame confirmation that this entire area that was once a bullish liquidity pocket, right? This is a textbook demand zone. You've got your impulse down, a period of consolidation followed by impulse back up. That's a textbook demand zone. I want confirmation that what was once a textbook demand zone on the higher time frame, what was once an area where buyers were meant to be in control of the sellers, where demand was meant to be greater than supply. I want confirmation that that area is now an area where the exact opposite is true, where sellers are in control of the buyers and where supply is greater than demand, right? And us putting in distributive structure at the underside retest of this area where this was once the case is going to tell us exactly this, right? So we've already started to put the distributive structure in. We just haven't had any follow through yet, right? So we start closing weekly candles below this zone. Um, I think you then start your drop on Bitcoin dominance. Right? If you hold this, there's always a chance that you go recover and then do something like that, which would make the entire argument for a distributive structure go out the window until new structure develops. Right. So for a easy scenario, let's say for a ideal scenario, we want to go and see weekly closes now below 57.24%. Basically, right? Below 57.24%, we want to see weekly closes below this. Do that, and again, you're looking at Bitcoin dominance topping out. If Bitcoin dominance tops out and Bitcoin dominance is going down, while let's say USDT dominance and USDT plus USDC dominance is also going down, and Dixie is also going down, then that's going to be a very strong indication that your money should primarily be in alts. I expect you like bonanza alt season, right? And by no means I'm not saying I'm waiting for alt season. It's like I've been saying this for a while now. Many alts have pumped heavily since September, right? Since we released the harmony setup video, many alts have done multitudes of percentages. Um, so it's not like alt season hasn't been here. Right? Alt season has been here for a while, but I'm talking about that euphoric alt season where Bitcoin is definitely not in the lead, right? Because so far Bitcoin, for the majority, has still been in the lead, right? Very much so. Because if you, again, look at the higher time frame, Bitcoin dominance chart tells it all, right? There's not been a structure change on Bitcoin dominance yet, but now on the weekly, you've got a proper lower high, right? Do we get follow through of this or not? Do we get confirmed structure change? That's all we need to know. They start breaking down. That's where you get your euphoric alt season. Okay, there's a difference between the alt season we've had so far and a proper euphoric alt season, right? Even if it only lasts for like a month or two, or let's say a quarter, something like this, right? You get just insane returns on your investment. Now the question is, does that play out now, or do we get chopped out some more before that comes out to play? Right? But for now, this is a good sign, right? This weekly S&P off the 382 lower high. First time we've had a proper lower high since we've been breaking out on Bitcoin dominance. We just need follow through. Right? Distributive structure is underway. We just need follow through to confirm the distributive structure, confirm what was once support, an area of bullish demand has now turned into resistance, turned into supply. We just need confirmation of that. Weekly close is below 57.24, like I said. Right. So that's what I'm looking for Bitcoin dominance. Now we need to look at Ethereum dominance right now. So next, let's look at the totals, right? So totals, like we looked at last week, we're getting a nasty, we got a nasty weekly candle here, bearish engulfing, nasty rejection of the projected ABCD levels, right? So these were projected way in advance. We simply, all we did, we identified the wave structures and then we put these on saying this could be an area where sellers step in, right? And it was indeed an area where sellers did end up stepping in. We hit the macro AB equals CD and AB equals CD 2.0. We're getting a rejection of it, right? Again, people will be bearish looking at that candle, right? But this is where I will give you a quick tip is you need to have um, your thesis, right? Your thesis for are you bearish or are you bullish? You need to do so based on what time frame are you saying you're bearish or what time frame are you saying you're bullish, okay? Because I know a lot of people that were bearish over here. And if you were bearish, firstly, right over here, uh, just based off how I see the market, there was no reason to be, right? Because yes, you were getting, you hit a key area, but there was no confirmation yet of sellers actually taking control in this area, right? So then once the daily bearish engulfing comes in, then you can be like, okay, maybe we're going to get a slight pullback. So then on the 4 hours, you end up being bearish, right? Okay, on the 4 hours, you start to see lower highs and lower lows. You see distributive structure start to come in. Fine, right? 4 hours bearish. But then again, what many people do wrong is they'll be bearish on the 4 hours, but then they'll carry that bearishness through to all the time frames, right? So you'll be bearish on the 3 days, you'll be bearish on the weekly, right? That's not how it works, okay? Even if you were bearish on the 4 hours here, right, after you saw the bearish engulfing, that does not mean your thesis has changed on something like the weekly or the 2 weeks, right? The monthly even. Your thesis hasn't changed on any of the higher time frames, right? So it's very important for you guys to be able to differentiate your thesis based on what time frame are you talking about, right? You taking a short on the 4 hours, on the 15 minutes, on the 1 hour doesn't necessarily equate to you now getting rid of all your spot bags and be like the market top is in, right? And many beginners will make this mistake, right? They'll carry one thesis across all the time frames, right? On the weekly, there is nothing wrong with the chart that we're currently looking at. Like, sure, we've had one weekly bearish engulfing red candle, but that could very easily be outdone in a couple of weeks, right? At the end of the day, structure hasn't changed. You haven't lost key support levels, right? If anything, you're literally still above your 2021 all-time highs, right? You haven't even retested it yet. And if this ends up being the bottom, this dump was even more bullish because what you're saying is, look, we're so bullish that buyers aren't even letting sellers come to retest 3.01 trillion. They're taking all that supply before you even get down here, right? So then on the weekly, there is 0 point being bearish, right? There's no reason to be bearish on the weekly. There is, you've got a lower high on the daily, so then maybe you'd be a bit more cautious on the more local time frames, right? Which is completely fine. But on the weekly, on the higher time frame, there is nothing wrong with the charts. Okay, absolutely nothing. Nothing crazy has happened. You've hit a key level, got a slight reaction off it. Just because we've hit this projected area does not mean we need to get a 50% dump off this area, right? For all we know, we could put a higher low in here, go and flip this into support and run all the way up to 4 trillion, right? No one knows with certainty what the market's going to do. All we can do is have our key area set, right? So for example, we had this set before price even got here, right? Weeks in advance. And then we just watch to see which side shows you an edge, right? So then if you like, again, if you went to something like the daily or the 4 hours or something like this, you would start to see, okay, we tried to get above, we put in, and then you've got the bearish engulfing candles coming in. What was once resistance is flipped back into resistance again. On the lower time frames, like the 4 hours, you see sellers are showing you an edge. So then on those lower time frames, right, on those intraday time frames, you're fine with opening up some hedges, right? But what you're not going to do is say, okay, the market top is in and get rid of all your spot buys, and just be like, I'm not going to buy anything if we get a dip because clearly, or the market top is in, we could dip very, very heavy, right? There is nothing on any significant time frame telling you that the market structure has shifted bearish. Okay, so we've hit the AB equals CD 1.272, the 2.0. We've got a reaction of it. Listen, as long as we are holding this gray box, right, basically between 3.01 to 2.6 trillion, as long as we are holding that as support, there is absolutely nothing, and I repeat, there is absolutely nothing wrong with the total one chart on the higher time frame. And therefore, by extension, that just means that eventually we're expecting Bitcoin to just get money rotated back into it again and for it to go back higher. Okay. So differentiate your time frames, please. Don't have one like bearish on the 4 hours, therefore we must be bearish on all time frames or something like this. It's okay for you to take shorts on the 4 hours as long as, I'm not one of those people that's going to tell you don't short in an uptrending market, don't long in a downtrending market, right? Because you could be bullish on the weekly, you could be bearish on the 4 hours, right? You could be bullish on the 15 minutes, right? Different time frames are going to give you different trends. It's up to you to decide, okay, what kind of trade are you going for, right? What time frame uh, is needed, right? What's the optimal time frame for me to trade on depending on what type of trade I'm going for? So for example, if you're scalping, you're not going to be looking at the weekly chart, right? And if you're trying to swing, you're not going to look for entries on the 15 minutes, right? So you decide what kind of trade are you going for, and then you differentiate your time frames based on that, and then what's your high time frame trend, what's your intraday trend, and then what's your trend for, let's say, the lower time frame if you're scalping, or what's your trend for the intraday if you're just trying to trade the 4 hours, right? It's up to you to decide. But I'll repeat, on the weekly, there is nothing wrong with this chart, right? There's nothing bearish whatsoever with this chart. Structure hasn't changed yet, is the point I'm trying to make. Okay. So again, if we go and flip 3.63 to 3.72 trillion into support, the next target we're looking at is somewhere within this box, right? So you've got the 1.618 of a deep grab, XABCD, and this gray box is also showing you the shallow golden pocket plus liquidity rate of the trend-based extension. So we have both in terms of trend-based extension and fib retracements. We've got a key confluential area, let's say, here, right? Now, again, by no means am I telling you to go and set limits for, where you think Bitcoin is going to be when we get to this area. What we're going to do once we get here is, are we going to wait to see, do sellers show you an edge? If not, then, we could literally flip this into support, carry on going higher, right? But if sellers show you an edge, then perhaps you can catch a nice trade back towards this level in the future, right? So again, all we're doing, setting out some, key levels in this case in terms of wave structure that we see. And then once price gets there in the future, we're going to validate these areas based on the price action we're getting from buyers and sellers. Whichever side shows you an edge, that's the side you're going to be taking a trade off of. So that's total one. If we look at total two, again, total two, absolutely nothing bearish with total two. In fact, I think total two looks even better right now than total one, in the sense that total two clearly hasn't even rated its all-time highs yet, right? So there's a reason why there's a magnet to take this to the upside. And secondly, if you take a look at what we're doing, we simply rejected off the 1.618, right? So you have the 618 here, therefore the 1.618 extension, you hit it, you retraced your 3-month seller zone. Okay, so right here, if you go to the 3 months, area on the 3 months where buyers were in control, but then sellers took control back from the buyers, right? That's what we got marked out. Significant time frame, 3 months, right? You have retested that as support and you've confirmed the area to be support. You're not closing below, you're not breaking down, none of that. On top of that, not only is this a 3-month seller zone, if you look at the weekly, you also have a weekly bearish order block here, right? You have a mitigated bearish order block that has now been flipped to support. So again, same thesis as before. This is an area in the past where we expected sellers to be in control over the buyers. We expected supply to be greater than the demand. But what is this telling us? Well, that's telling us the exact opposite, right? You completely slice through the order block, right? And now you're treating it as support, right? If this is support, if you're getting SFP to the upside, if buyers are taking control here, then that clearly means instead of sellers being in control of the buyers, we've got buyers being in control of the sellers. We've got demand clearly outweighing the supply right now, right? So this is a tip and trick for you liquidity pocket traders, right? I know many people, most people who use liquidity pocket, as soon as your liquidity pocket becomes invalid, you delete it, right? Don't do that, right? I like to call this mitigated liquidity pockets. You can still use the fact it used to be a liquidity pocket to read future price action, right? So I'm simply reading the fact that this used to be a bearish liquidity pocket. And since this used to be a bearish liquidity pocket, we're getting bullish signals, right? We're getting bullish price action coming in at what used to be a bearish area. This is a narrative flip, right? What used to be bearish is now bullish. So that is something you take seriously. You don't stay bearish when you see something like this. If you were to go down, if you were to break down and then boom, right? If you were to do this, then you've got distributive structure being created in the time frame on the weekly. What was once resistance is once again resistance. Be bearish, right? After that, head some shorts, right? But as long as you're above this, I do not see any reason to be bearish on total two. Next target, go raid all-time highs, right? After you raid all-time highs, we have a 1.272 macro ABCD at around 2.06 trillion, right? And let's say, even if we get a deeper pullback, right? Let's say we get one more drive down. Let's say we get a zero point 0.5. on the drive down here. We just have a new wave structure that gives us an even higher target, right? So even if this is it, even if that is the low, right, we could go with something like the 382 in this case, right? We'll be looking at a 2.24 to begin with, and then a 2.618. So you guys know how this works by now. And in deep cases, a 3.618, which is going to take us much higher, right? So just, consider it, as long as we don't lose this level, you're going to have a new wave structure being created here eventually, right? That gives you even higher targets than we've had so far, right? Because now we've got new data we can work with. So in my opinion, there is no reason to be bearish, right, on total two. Total one, same thing, right? Total two, even more of the same thing. I just don't see on the higher time frame a reason to be bearish on total two. As long as you're holding this level, great. Again, if by the time the 12-month closes later, we close above 1.39 trillion, that's even more beautiful, right? But at the end of the day, 12-month close above this level here literally means you're closing the year out at a very, very pivotal level. Like, look, you're closing a candle body above an area you just haven't managed to do so in the past in the 12 months, right? I would want, ideally, in an ideal world, I want us to close above 1.39 trillion. But even if we don't, even if we close just above 1.31 trillion, that is also fine by me, right? Because let me show you why. If I turn off all of these ones, literally, even if I just turn that off, take a look at this in the past, right? In the past, in terms of 12-month closes, look, you haven't managed to get a candle body close above 1.31 trillion. So in 10 hours and 57 minutes, if we close above this, that's a all-time high in terms of a 12-month close. That is very, very significant. Okay. And again, especially if we close above 1.39 trillion. I don't know if that's going to happen, but if it does, even better. But if it doesn't, as long as we close above 1.31 trillion, this is now going to turn into support instead of resistance, right? So then any pullbacks here going into the new year, buyers have a chance to actually hold this as a floor and just rocket the price higher, right? So the 12-month closes are gearing up to be very, very nice, right? So that's total two. Next, let's look at total three. On total three, we have one sec before you guys get confused. Let me turn these off to begin with. There we go. Right. So total three is one that has already raided all-time highs. Right. So you go 2021 all-time highs already been raided. You're currently chopping around your 12-month levels back from 2021 and 2022. Right. So you've got 12-month sellers on low based on the 2021 close. You've got the 2022 12-month macro read sellers on high, all in these areas, right? 12-month levels, you're holding them as support at the end of the day. Right? You're holding key 12-month levels as support. Once again, if I go to the 12 months and we take a look at what's happening, right? Let me turn group one off. Look, in terms of 12-month candle body closes, this is going to be very significant because again, at this area for 2021 and 2022, anytime buyers attempted to get into this area, you were met with straight resistance closing below this level, right? You just haven't had a candle body close within this zone yet in history. If you close, and ideally we close above 924.45 billion in 10 hours and 55 minutes. If we close above this level, again, you're going to have the highest 12-month candle body close on total three to date, right? Because look, you've been in this area before in terms of 12 months, right? It's not like you've been in this area before, but every time you've been in this area in previous 12 months, buyers haven't managed to exert any show of strength within this area. We can see that, right? There's absolutely just wicks, no candle bodies. But now that's not the case. Right now, we have buyers attempting to close within this area where they just couldn't, they haven't been able to do so before. Now buyers are trying to do so. And this is what reading price action is all about. It's very nuanced, but buyers are clearly trying to put up a fight here. Right. And if you close above this level, this entire zone is just going to be key support going into the new year. Okay. Going into January, going into February, going into the next 12-month phase, going into 2025, this is going to be support. And you can I can guarantee you, like anyone looking at this chart, right, buyers, they're going to try their hardest to hold this as support. They know if they don't, there's a chance you drop all the way back down to 720, even 608, right, if they don't manage to hold this. Right, you've got this area here on the 12 months. If they don't manage to hold that level on the 12 months and on the weekly flip trend again, there's a chance you go back or down all the way, like I said, towards 498 billion even. right? And I'm strictly speaking in terms of the 12 months right now, right? Just historic price action. So it's in their best interest to hold this level of support, right? So we close above, then buyers are going to have a base at which they're going to be attempting to hold a support. That way, as you can see right now, even on the weekly as we speak, anytime you get into this area, you met with SFPs to the upside, right? Buyers are trying to hold. You hold this as support. What I'd expect in an ideal scenario going into January, just flip and carry on rallying to the upside, right? If you don't, and you go and let's say turn this back into resistance, start chopping and get below next year, and you turn this to resistance, then on the lower time frames, no, not even lower time frame, on something like the weekly, right? You have this area support yet. If you lose this area, that is when you're talking these zones, way deeper drop, right? So you've got two key levels right over here. Should we turn this gray box we just put down into resistance after this 12-month close we're going to get? So again, we need to hold this level as support, right? 12-month, but in terms of 12-month close, this is looking good, right? You're trying to close where buyers just haven't been able to before. Buyers just haven't been able to, right? So that is total three. And if I turn this on once, now arguments for downside, right? Do we have arguments for downside? Yes, we do. For example, uh, one second. What the hell? Yeah, there we go. Right? A, B, C, that C there is 0 0.5. So if we go and turn this B point into resistance, then this D could be in question. Right? We're not going to be surprised if you go and turn this B point into resistance. What you do, you validate this ABCD, right? I mean, you don't validate it, but you increase the probability of hitting the D point. So then you wouldn't be surprised if, like I said, 689, that sort of area did end up getting hit, right? That'd be a reason for us to now target for lower prices. But for now, this is only a potential wave structure. Don't take it like, overly seriously. Don't base your entire thesis of this one wave structure for your altcoins. But it's something that's under development. Should we lose this area we talked about, right? This 12-month level, if we lose that turn into resistance, then this is something that could be in the play before we go higher. Okay, just something to consider. But that now is total three, right? So you can see again though on the higher time frame, right? I pointed that out because it's something I saw, but on the higher time frame, still, if you look at something like the weekly, the monthly, even look breakouts of key resistance, and that is a successful retest on the monthly so far, right? In 10 hours 51 minutes, in fact, that's going to be a successful retest if we close like this, right? And like I said, like you can drop towards 788.6, but any drops here, I want to be quick, eaten back up, and this level reclaimed ASAP. I don't want us spending time consolidating down over here. Okay. But only think about 788.86 if you actually lose 873.62 billion. As long as you're above this gray zone, I would be targeting higher, right? Your next level would be to flip 1 trillion. After 1 trillion is 1.13 trillion. And from there, you'll have other wave structures you can put down, right? Just like that. We have the 1.36 trillion there. And let's see if we actually have, right? So over here, for example, we have a low. Hang on. We have a low. We have a high. We have a 448. So this is either going to be a 382 or a zero point 0.5 so far, based on if we get that one drive lower, right? If we get that one drive lower, perhaps we get that zero point 0.5. Maybe we even get a 618 if we do go back down towards this gray box. Otherwise, for now, what I see a 0.382. Yep. And again, if it is a 0.382, we're looking at targets of minimum 2.24, right? After 2.24, we're looking at 2.618, which takes us all the way up towards 1.59 trillion. And after 2.618, in rare cases, you got the 3.618 as well, which would take us higher still towards 1.85 trillion, let's say, right? 1.85, 1.8, yeah, somewhere around there. So new potential wave structure in the works, right? We just need to have a bottoming structure confirmed before you begin to take this more seriously. You can see many, total one, total two, total three, all of these are putting in like new wave structures, right? New legs of the market that give you higher targets, right? So again, on the higher time frame, what's there to be bearish about? Right? Nothing much yet. It's a very fine line between like where we are right now to just going straight bearish, right? Like if you were to drop here, reconfirm this area as resistance again, then you flip bearish, right? Maybe take profits on your altcoins, open some head shorts, right? But if you do not do that, if you keep holding this level of support, there's no reason to be bearish where you currently are, right? If you pump from here, but then you go back up towards your next, like, key levels, and then you start to see SFPs there, sellers showing action, that is also somewhere else where you can try and take a hedge, right? But where you currently are, which is literally at support, I just don't see it. Don't see any reasons to be bearish here. That's total three. Next, let's look at others. Others, we have the 0.707, 1.414, that's that being a reciprocal ratio, right? You are back underneath. Okay, so for others looks worse than total three, in my opinion, in the sense that others is actually below, like in between these two gray boxes, basically, it's a range, right? For me, it's a range. There's a range high, there's a range low. What others is doing, others is currently in between uh the said range, right? So you've clearly treated this range high as resistance again. And if you're back within this range, then you're not going to be surprised if the range lows, which is let me see the price. You're not going to be surprised if the range lows, which is this basic right now between 256.51 to 234.25 billion. You're not going to be surprised if range lows is visited. But right where you currently are, based on the others chart, I wouldn't really do anything. Right. What I mean by that is if this was a ticker you could trade, this would be a no trade zone. Right. You are below resistance, right? That much is very obvious. But you've already had your bullish reaction off the mid of this range, right? So there's a range high, there's a range low. Here's the mid of the range, that dotted white line. Okay. So you've held the mid of the range. So then if you wanted to actually take a trade on this, like when you saw the, for example, right, you go into something like the 1 hour, 4 hours. When you see the mid being re-regarded as support, that is where you actually try and take a trade, right? This was something you would have wanted to trade. Right now, the reaction off the mid has happened, right? You've reconfirmed this range high as resistance, right? But you haven't gone back down to turn the mid into resistance, right? So you're literally in the middle of nowhere. It's a coin flip whether you go higher or lower. So the only way, if this was a ticker you could trade, right? The only way you would take a trade is either if you reclaim that resistance as support, or if you like raid and reclaim this as support, right? Because if these two scenarios don't play out, the only scenario that's going to play out is you go and turn something into resistance here and go take range lows out, and then you take your next long at the range lows, right? So right now this would be a no trade zone. Flip for entries, basically, right? Flip for entries, very very simple. Or if you start getting like monthly SFPs and monthly rejections from this area, um, so for example, you've got a monthly SFP here, close below. If in the next month, right after this month closes later in 10 hours time, if in the new year and whatever you see a pump back up, but then on the weekly, on the daily, whatever, you start to see SFPs in this area once again being re-regarded as resistance, then you can try and take a short off that, right? But where you currently are, is risk to reward wouldn't be there for either side. You're not going to short based on this, you're not going to long based on this, right? So others is in a very peculiar state right now. Right? Basically, you need either a flip or a confirmed rejection from higher slash the mid here basically for you to have any sort of directionality that's valid. Okay. Again, on the higher time frame, however, on the weekly, right? There's your low, there's your high, there's a higher low, there's your higher high. We're just waiting for a higher low confirmation, right? And if this does end up being the higher low, once again, what we have is the potential for a new wave structure. Here's your low, here's your high, here's your high, low 0.541, i.e. that is a zero point 0.5. We're looking at a 2.0 extension. Okay? The 2.0 extension would take us to 601.77 billion, right? So we now have a new target above even the macro 1.13. All we need is a confirmation that that is indeed the bottom. We need some sort of follow through back to the upside, right? That's it. So again, on the higher time frame, until like the structure completely breaks down, there's just I just don't see like weekly, monthly, 2 weeks, so on and so forth, reasons to be bearish. Right? Not yet. So that's total others. As you can see, all the different totals, um, it's like the 4 hours, the daily show, lower highs and lower lows were put in. But even with those lower highs and lower lows, those aren't happening below key levels. Okay. Apart from on total three, in this case, that's obviously below key level. This could indicate like, also on the top 10 could chop around some more. But for total, right, total two and total three, you're literally holding the key levels you need to. So even though you've had local lower highs and lower lows, those lower highs and lower lows have taken you straight into higher time frame weekly supports, right? Weekly, monthly, 12-month supports. So if that support holds now, you're just going to get a trampoline bounce straight back to the upside. Okay. So that's total others. Next, let's look at others dominance, right? So this is others dominance. Again, others dominance is at higher time frame support. You can see that, right? So we have, again, why was this, why did we look at others dominance to begin with? We had a completed M shape in the form of Gartley by 618, 786. We had a completed M shape. We had the trend right over here. The completed M shape gave us a type 2. The type 2 gave us a cumulative structure, right? Here we go. Initial support, radon liquidity, reconfirmation and support, right? And now you had local accumulative structure right over here that sent you higher. But now with this low and this SFP, right, and this close now within this area here, why have I marked this? This is a weekly fair value gap, right? So now this is a mitigated weekly fair value gap, right? You now have potential accumulative structure coming in into a weekly fair value gap, right? That's mitigated, an area where buyers were expected to be active. You have a potential weekly accumulative structure coming into that area. And for now, buyers are attempting to hold that weekly fair value gap as support, or okay, or rather what used to be a weekly fair value gap, right? This is very clearly why you have support and also why you've had resistance in this area. So not only is this support resistance, it's also a mitigating liquidity pocket, right? If this level holds and you start doing this, right, you reclaim 10.77%, I'm expecting a move up towards here next. You've taken out the mid of this range, right? The mid of the range has been taken out. So now next thing you're going to take out is the highs of the range. Okay. We just need again this red box to hold. Okay. Ultimately, as long as you don't lose this trend on the higher time frame, again, others dominance is completely fine. Right? Others dominance is completely fine. You could literally do this, chop around some more. As long as you do not lose this trend, others dominance is fine. If you lose that trend, then that gets a bit nasty, right? Then you arguments for okay, why could this harmonic be invalidated and we go lower? But until that happens, right, we'll focus on that if it actually happens. Until that happens, we have very clear key levels and very clear price action coming in around those key levels, which is sell off going straight into your key levels, but then cumulative structure being displayed and support coming in once you actually got to the key level itself. Right. So if this holds, again, next target all the way up here. You're above the trend, right? Your ultimate trend, and you're also above this key level right now, which is what it is. So again, others dominance also looks fine. Right? Others dominance looks completely fine. So that is all the different others, right? We looked at total one, sorry, that's total one, total two, total three, others, and then others dominance. Total DeFi literally, breakout, retest, you flip the B point of your bullish harmonic into support, right? You rejected off T2, front ran the 1.618. As long as you're holding this B as support, you're going to go back up higher. And literally the range extreme of a harmonic. Not only that, this is a weekly buy seller zone, right? We have a weekly buy zone below. So this gray box, this area of the gray box, as long as you're holding this, total DeFi is going to keep on climbing higher. If you lose the B and you turn that into resistance, however, right, these dotted white lines, this rectangle here, for example, if I was to go ahead and turn that off, so it's a bit clearer to see. If you go ahead and turn this area into resistance, then I'd expect to drop back towards, let's say 90.54 billion, right? Maybe another retest of this breakout from this massive supply rectangle we have going on right over here. As long as you're holding this, eventually you're just going to carry on going higher. Okay? So total DeFi also holding key levels. Right? And again, if this is the low, you do have new wave structure that we can put. That is a 5. So we're looking at a 2.0. Right? So we have another wave structure giving us a target towards 206 billion, basically. And the wave structure telling us, total DeFi looks ready to go higher. Right? Question is that the bottom or do we get any more drives down? Right? That's it. But if this is the low, right, then this wave structure will be in play. Okay. So you can see literally every single like, macro chart like total one, so on and so forth. Every single one of them is currently building new wave structure that can take us higher. And so again, on the higher time frame, this is why I keep saying on the higher time frame, on the weekly, on the 2 week, on the monthly, so on and so forth, I do not see any reason to be bearish. Okay. What that means is if you get dips, you're not going to be sidelined and sitting on your hands thinking, oh yeah, the top is in, we're going to get 88% retracements, right? That's not what you're going to be thinking. If you get that dip into key areas and then you see buying pressure start building up, right? You see SFP sit up to the downside, meaning that buyers are clearly stepping in, you take a bid with them because on the higher time frame, you recognize that there is opportunity for you in this move, right? Because the trend hasn't been shifted yet, market structure hasn't been broken yet, right? That's what that means. Last but not least, if you look at Bitcoin CME, we do have a CME gap down between 86.70 and 77.930 on the weekly. So does that get filled? Who knows, right? We'll have to see. Just pointing it out in case we do actually lose market structure, right? Now this is speaking in the case of us actually losing market structure, right? If we go and we reject on off our high time frame levels, right? We put a weekly lower high in, and we put distributive structure, confirm distributive structure, right? You get double tops coming in at resistance, then we could perhaps get a fill of this at some point in the future, right? But just because the CME gap there again doesn't mean price needs to go down before it goes up. Okay, a CME gap can take ages to fill, right? If you look back at last cycle, some of these CME gaps took years to fill, right? Just marking it out there in case anyone hadn't realized there's a CME gap there, right? Just extra confluence for now. Why, if you do get weekly shift back to a downtrend on Bitcoin, why we could go down to fill 86.70 to 77.930, that sort of level. Okay. And does Ethereum have a CME gap? Ethereum's already filled a CME gap. Ethereum has nothing. Yeah, that's fine. So let me quickly check back to the chat. I've just been talking to myself for a while. Sorry, guys. Um, yo, what's up, Grisati, brother? How you doing, man? How you doing, brother? Right, let me check the chat. What's up, Rai, bro? How you doing? Nice. Good to hear, brother. More about you. Yeah, sure. Viv, we'll talk about it now. I'll go into actual coins. Let's see. Oh yeah, no, that's true. There is a potential mistake there. Nice. Okay, let's take a look. Uh, okay, let's move on to Bitcoin next. Focus BTC. Let me give me the index chart. There we go. Okay, so on the index chart on Bitcoin, but that's a very nice reaction of this low. This is the reason I had this area marked out, right, in terms of volume profile. This was a very, very significant area. I'll explain in a minute. Okay, but let's go high time frame first before we look at local price action. So let me turn off this and these two. Okay, so on the weekly, okay, on the weekly we have the AB equals CD 2.24, that's been hit. The AB equals CD 2.618 has yet to be hit, and the 3.618, of course, as well has yet to be hit. What we have here is we had a bearish engulfing candle on the daily. We looked at this on last week's stream, on the Christmas Eve one. Well, let's take a look. So we had a bearish engulfing candle that gave you distributive structure, right over here. So this is your daily seller zone, right over there. It gave you distributive structure, right? So that is the reason why we then got follow through back to the downside. Right? We had a local distributed structure being put in right over here. And the distributed structure came in on the 19th of December 2024. Now, we also have local distributive structure being printed over here. Right? If you see that inverted smiley face. So you have two different inverted smiley faces playing out right over here. Right? So one and inverted smiley face number two. but we just haven't had good follow through of those inverted distributive structures yet. Okay, so that is the problem. This hasn't led to a serious follow through yet, right? You want to see a massive continuation candles to have an efficient move following distribution, and in the same way, you want to see massive green candles off of accumulation, right? We haven't had that yet. So you had one retest candle, but then look, local structure wasn't lost. Local structure was not lost, and now you're putting in a bullish hammer candle as we speak on the weekly. Right, so now let's see how the monthly candle is looking. The monthly candle very indecisive, right? You've clearly grabbed liquidity from the top, but you're holding support for now. So it's a very indecisive monthly candle, right? But on the 12 months now, again, higher time frame, the 12-month close is going to be absolutely spectacular. Right? I don't, one sec, let me turn these two off. There you go. That 12-month candle is absolutely ridiculous, right? If this 12-month candle closes like this, I would expect continuation, right? More upside next year. This always happen. Look, following the year of the breakout, right? Typically, you get continuation, right? Following the year of the breakout, right over here, typically you get continuation. Every time you've broken out of all-time highs, right? You typically get continuation. So this is the 12-month candle that broke us out of all-time highs. I'm expecting continuation. Now, how high do we continue to? I don't know, right? But this 12-month candle cannot be argued with, right? Your last significant 12-month level is literally 68,997. You are way above. You're way above. So in terms of that, right, Bitcoin, I'm expecting continuation next year, right? That's why I do not think the market's topped out yet. Okay. Now, I would, uh, for anyone that was in shorts, right, I would have loved for the shorts to have been paid real quick by giving us a nasty flush, right? But that just didn't happen, right? We got one sell-off candle that was bearishly engulfing in the 16th of December week, right? And like I said, the distributive signs that have been put in just haven't gained follow through. Right? Even this weekly candle, look, they tried to dump it and buyers are just straight up reclaiming it again. Right? You're getting a bullish engulfing candle currently as we speak on the daily. And if this bullish engulfing candles, if you get a, I feel like many people underestimate how powerful even something like a daily bullish engulfing candle is. Right? Normally, obviously, that's a powerful sign, but okay, cool, you got a daily bullish engulfing candle. What's the great deal? If you go back in history and look every single time we've had a yearly close, if that yearly close was followed if that yearly close was, sorry, heralded by a daily bullish engulfing candle, you have gone on to the craziest of rallies on January. You've just had that massive spike up in January again. So if we get, right, if this candle just keeps going up and up, you get a bullish engulfing candle on the daily. By the time the 12-month closes later today, I'm expecting January to be bullish, right, until proven otherwise. So you literally just like all you've done, taken out a couple of stops. That's it, right? This is very. I wouldn't. I'm not. I don't want to call this efficient price action, but it's better than inefficient prices, right? So obviously these two stops have been taken. This hasn't been taken. This hasn't been taken. Leaving that for the future, perhaps. Who knows, right? But if this daily bullish engulfing candles comes, I'm expecting a move up rather than a move down coming into the new year. Now, locally speaking, right? Why was this level so significant, right? If I now go ahead and turn Group 7 on, firstly, there we go. Right, so that's Group 7. On the 4 hours, firstly, why did we bounce from this level, right? If you take a look, A, B, C, there's your 382. Your 2.618 of the ABCD was exactly over here. That's why you bounced the first time, bounced the second time, and why you're once again reacting from the set area over here, right? Now, if you wanted to go deeper, the same wave structure can also give you, like I said, a 3.618, right? In rare cases, at overextension, 3.618 can be heralded by the 382. That give us $89,218 on Bitcoin. We should also stop out this wick and this wick, right? Now, what about this? Yeah, stop out this. The only things it wouldn't stop out is anything lower than this wick, basically. But again, that's no guarantee, right? It's no guarantee it needs to go there, basically. Now, on the 4 hours, I would not mind a pullback, right? If you got a pullback and reconfirm this level as support, you would have again confirmation of support, radon liquidity, reconfirmation of support. You'd have cumulative structure, and that could send us higher. But let me just confirm that we haven't had a lower time frame. We had lower time frame confirmation. No, we haven't. Okay, so on all time frames, yeah, it's just been a bullish engulfing candle that's taking higher, right? Now, why have I got this rectangle here marked out, right? So now we're gonna take a look at this in terms of, did I delete it? No, it's here. There you go, fixed range volume profiles, okay? And one second, if you go to the 15 minutes, right, we have a very, very clear range here, right? We have a very, very clear range. This is your fixed range volume profile for this zone, right? So you have a very clear consolidation pattern, right? Over here, consolidation, consolidation. You have a consolidation pattern, right? And then you have a radon liquidity following that consolidation. So originally, I am putting my fixed range volume profile basically until where I deem the range to be. The range to me is, okay, you have a low over here. Let me just line it up. So for me, the range is all the way up until this red candle right up, right? Because after that candle is when it went low. So originally, this is what I had drawn on last night, right? And then, so following that, all we have is, so this gray box here. Oh, wait, this gray box here. I'm simply marking out the area that is representing around the 15 minutes. If I have to actually do this, I'm simply marking out the area that is representing your second and third standard deviations, right? Your second and third standard deviations, all the way up until your ABCD 2.61, right? So fixed range volume profile. This is telling me within this range, where has the most traded volume taken place, basically, right? So within this range here, we're saying here's the value area high of standard deviation one, here's the value area high of standard deviation two, here's the value area high of standard deviation three. Here is the point of control. Here is the value area low of standard deviation one. Here is the value area low of standard deviation two. Here is the value area low of standard deviation three, right? We got a rate of standard deviation two and standard deviation three, right? So then what we're saying is, okay, if this area gets turned to resistance, right, you can take shorts to the downside, right? So on the 15 minutes on the three, you have plenty of good RR scalp opportunities here. But if this ever gets flipped back into supports, right, since you have a 4 hour range, your biggest best plays are going to be if you see like levels being reclaimed as support. If this ever gets flipped back into supports, then you have a move up. Then what you're saying is now you're targeting, point of control first. Point of control is right over there. After the point of control, you're targeting again value area high, and then value area high with three different standard deviations. Right, so you've got a radon liquidity, reconfirmation of support, and now you're going back higher. So the point of control falls exactly over here, right, based on the range that we had selected before. Now, if this comes up back to this area, and if this comes up back to this area and we reclaim a support and carry on and carry on going back to the upside, then this range clearly hasn't been voided yet, right? In which case I'd have to adjust my levels, but I'm going to leave it on like it is until we get confirmation that we are truly in this range and this isn't just like a relief pump going into New Year's before we just absolutely crash, right? So for now, if the point of control gets flipped to support, you can take scalp longs to the value area high. If the point of control gets flipped to resistance, you can tell scalp shorts back towards value area lows, right? That's basically what I'm doing when I'm putting this down. So locally speaking, you're having a very strong reaction because you once again confirmed you're back within this trading range here, right? In terms of volume, you're back within this trading range, and currently you're at the most traded price for this range we've been in. And that's all, locally speaking. But now on the higher time frame on Bitcoin again, it's you can see that on even on the weekly as we speak, right? There's bullish candles being attempted to be printed. Of course, 5 days, this candle could turn absolutely nasty within the next 5 days. But this daily candle is going to be very important to watch, right? Do we get a bullish engulfing candle? If so, we probably get continuation to the upside following the new year. That's my thesis. Okay. Nothing much else to say on Bitcoin apart from that, right? Because you've already put in your distributive structure on the daily, right? On the weekly. We're just not getting follow through off that yet, right? You want your distributive structure to be followed by some sort of sign of continuation to the downside, right? So again, even on the weekly, you have initial resistance, radon liquidity, reconfirmation of resistance, after this, you want like to ideally this is where you start building a short, right? If you wanted to let's say swing a short, this is where you start building. You don't go all in here. You don't go all in. Remember, never go all in until trend is confirmed, right? Let's really start building a short because that way, if this is if this does happen to eventually play out the distributive structure, then you've already got a position. You can average upward, size upward over time, right? Again, remember 20, 40, 40, right? You can change the ratios however you want, depending on how close are you to your invalidation, right? If you're really close, increase your initial position size, right? Your CMP entry, increase that. If you're pretty far from your invalidation on the macro, decrease your CMP so that you can absorb the chop should you go a bit lower or higher in this case, right? But then, you'd want to see breakdown, right? And then you want to see some sort of another lower high coming in. And then once that's confirmed, that's where you like, you put in your size, bring your average down, but now you've got a confirmed entry, right? You've got a safe confirmed entry, but you're extracting the bulk of the move for a swing, right? But what we see right now, we're just not getting that follow through. And of course, it could happen still, right? So on the weekly at the end of the day, it could take a couple of weeks, it could take a month, right? But as long as um, we don't get any follow through. BDC's what it's doing right now is just showing just straight up indecisiveness. That's all that's happening. You're chopping in between a range. Right here, you have a weekly buyer and a seller zone next to each other. You just haven't lost that area. Right? It's the same level we were looking at back in November. Look, you literally hit the mid of the set area and you still haven't lost it. Right? You're still holding the mid of the same exact area you were holding back in November. Right? This reminds me very much, right? This reminds me of, if you take a look, what do you notice? Breakout, vertical accumulation, expansive move, followed by a drawdown, right? This literally reminds me of this period right over here. Breakout, vertical accumulation, expansive move, and then like a drawdown, right? The only difference is the drawdown here actually stopped out majority of the wicks, right? The drawdown here hasn't even stopped out majority of the wicks, which makes me think you could chop around some more for sure. But if this is literally playing out as this is, then I don't think we get like a severely deep pullback on Bitcoin. Okay, and so far it's literally the same, right? You have a period of consolidation, breakout, vertical accumulation, expansive move, slight drawdown, and then continuation, right? You have a period of consolidation, breakout, vertical accumulation, expansive move, period of drawdown, right? And now, like if this is the low, and like if the daily closes like this, maybe we don't even get a rate on these liquidity, right? Maybe we literally just send it higher. And this reminds me very much of what was happening back here in 2023 December, right? December 2023, start of 2024. It literally reminds me exactly what was happening this time last year, right? 31st of December, pretty much this, we was pretty much sat at the same spot. Only we've already had this drawdown period now, right? Which makes me think, are we going to get a move up before we get any sort of move down, right? But of course, you go and flip this into resistance, that theory goes out the window, right? All we can do is we can react to what the price action is telling us. And right now, you're just not getting any follow through for the distributive structure that's being put in. Just there's no follow through whatsoever. So let's see how the daily closes. But yes, this 3.618, that could be your radon liquidity of the majority of the wicks, right? That could be this liquidation event you got on the 24th of January, right? And then perhaps after that gets hit, we go higher. Who knows? I'm just speculating some ideas, right? But for me, honestly, I think Bitcoin looks good. Um, it looks good in the sense that obviously you've stalled out for now, right? Momentum has died down a bit, but sellers haven't been able to capitalize on that, like Momo shift, right? Once you've extended so hard, normally when momentum slows down, you'd expect sellers to just start slamming the shorts, right? Just send this down a bit, get some money off the shorts, but sellers haven't been able to do that. They just haven't been able to. Let me check back to the chat. Happy New Year to you too. No, I appreciate you always showing this report. 85K. 85K would be stopping everyone out. Yeah, we'll see. I want to see. I'm just gonna see. In 10 hours time. Let's see how the daily candle closes. All right, let's just see that. 12-month close coming up. Very, very important. But yeah, that's Bitcoin. You add key support, right? You're not getting follow through off your weekly distributed pattern. But at the end of the day, should you actually lose this and turn this to resistance, you've had a distributed structure and then you've had a break in local structure, followed by you just need for a local lower high, you can get a really nice, like swing short down probably towards like 70, 60K, right? Um, but as long as you hold this, that's a pipe dream. You're just going to keep chopping. Maybe create a new range and then go lower, right? Who knows? Maybe we range here for a few days, not a few days, few weeks, few months. Doesn't have to be up only at the end of the day. But yeah, that's Bitcoin. Okay, let's look at Ethereum next. Someone was asking about Ethereum. Ethereum, exactly like the total two chart, Ethereum looks completely fine. Okay, in fact, I would go as far as saying Ethereum looks better than Bitcoin in the sense that if you look at the structure, right? The whole reason I kept calling Ethereum down over here is because the key inflection area between R2 and R3 was being held, right? You went to the top of your next key inflection area, and again, these are the exact same levels I've been using over the last few years, right? Nothing's changed. I will repeat: if you have key levels on your screen, you should not be having to change them on a regular basis. Okay, we have the key inflection area between 3,581 and 4,028, right? You rated the 4,028 key inflection area high, closed below. That would have been a nice short trigger, right? Now, I didn't take this short myself, right? Because I wasn't actually paying attention when this happened, so I missed the short. But if the actual price action, it was there, right? It was there. Had anyone been paying attention to this, like let's say if you were looking at this as key area and you saw that, that'd have been a nice area to try and take a short. Again, I did not take one personally. I wasn't paying attention to ETH when this was happening. Right? I was literally just holding my spot on my swing leverage long. You got a rejection of the key inflection area, and if you lose the key inflection area, in my system, all we say is, okay, we're going back towards the historical price range mid, right? That's right over here. We went to the historical price range mid. We went to the key area around the historical price range mid. What's the first key area? You have a weekly fair value gap that's mitigated all the way from history here, right? 12th of February 2024, we went and regarded that as a support. You also have this bearish weekly fair value gap right over here, which you've gone to, and again regarded that as support as well, right? Now what you've got is a very, very clean potential smiley face structure being put in. You have left eye, you have your smiley face, and you have your right eye. You could get one more drop, doesn't matter. As long as you hold this gray box, right? As long as you don't lose this, as long as you can hold this area, you have a specific variation of the smiley face. I'm sure you're all familiar with this. This is called the head and shoulders, right? Specific variation of the smiley face, whose measured move takes you all the way to $6,000 ETH, okay? If it were to play out. So as long as Ethereum is holding these, let's say 2,821, as long as ETH is closing above there, right? And not breaking it, losing it, right? Closing below there, I think eventually Ethereum goes higher. And pair this with the fact, again, Total 2 looks ready to just keep carrying on, right? Flipping his 3-month resistance into support. I think it's just literally, it's just a matter of time before ETH goes absolutely bonanza. We've had the first leg from this low. We're having a pullback, just waiting for that second leg now. And again, imagine this is the low. If this is the low, then you have a potential wave structure, basically a zero point 0.5, right? I'm going to take that as a 0.5. 0.5 is literally lower. We're going to go with the 2.0. Even if you go with literally just that wave structure, you have a rate of all-time highs on your hands, right? 2.0, right over there. Now, we've already know that we've looked at other wave structures already, right? We've got, which one is it? One sec. It's one of these groups. There we go, right? We know we've got the 4,640, right? We know we've got that. We've already got an AB equals CD at 1.618 at 5,313. So now we've got a zone within which to watch. And above that, we've also got the macro ABCD at 1.272, 5,890. 786, 1.272, right? So there's a lot of reasons to be on the higher time frame bullish on ETH, in my opinion. Of course, if you lose this again, that goes out the window, right? You no longer have a smiley face. So, maybe you drop back down towards 2,200 again. As long as that's held, eventually it will go back up, but you won't have that measured move of the smiley face anymore. You won't have this wave structure anymore, right? But as long as you hold this, I think Ethereum looks so good. So, so good. Nice, bro. The SFP here, yeah? Nice one, bro, yeah. I should have set some alerts up. I didn't have anything. So yeah, by the time I looked at it, I basically looked at it during this candle. I'm not gonna call a short once once the move's actually already played. But that was a good catch, bro. Nice one. Yeah, we had the SFP at the KFA, and then that took us lower. Um, right. Ethereum, again, who was asking about ETH earlier? It was Viv. You're still here. That's ETH. Looks good, in my opinion. As long as you hold this gray box here, eventually this is going to go higher. That's ETH. But yeah, so let's quickly scan the top 10s. Vanry back down to key levels. Um, I'm still holding my Vanry. Right? I'm still about, I think, 30% in my spot bags. I'm still up about 30% where we currently are. Yeah, 40% I'm still up. Got my stop loss a break even. So Vanry, as long as you're holding this zone, right? What you're doing is you're reconfirming the last lower high that led to your lower low. You're reconfirming that as support, right? So if you hold this, all you want is a reclaim of the gray box. You can be on your merry way, continue the trend back to the upside. Okay. So that's Vanry. I'd wait for a reclaim again of this red box here. The gray box. You go and reclaim this gray box. If you're not in Vanry, feel free to add some, right? You just want that reclaim of the gray box first. Do we have any wave structures on Vanry? Let's take a look. Uh, yeah. Yeah. So if this is the low, you have a potential ABCD, right? That takes you to those 22 cents on Vanry for the next leg up. And then in my opinion, you'd probably go and raid this if you do go back up here, right? 0.24, somewhere around there is where I'd be targeting. Again, considering if this is the low or not, right? Of course, if this is not the low, then we could get moves back to the downside. But if this is the low, then you have a potential wave structure building up to take you back towards the D point. So for Vanry, flip the gray box, add, right? So if you flip this gray box, I'll be adding to my spot bags myself, right? So the swing leverage longs that I've took profit on, I'm going to be using those profits to just literally add more on spot, right? So for me, I just want to flip with this gray box. I'll be averaging up on my Vanry spot bag. Do that and then just send it high. So that's Vanry. Very, very simple. Gray box, flip for entries. Okay, as long as you're below the gray box, just sit on your hands for now. As soon as you get above this gray box, flip for entries. So that's Vanry. Right? You retested the 786 on that drawdown. You can see that there. Right? 886 bottom, 786 higher low. Send it back up, in my opinion. That is Vanry. Solana next. I think Solana looks absolutely fantastic. Now, what Solana is doing, one second. This is well, fixed range volume profile on. Where is that coming from? I don't know why. One second, just deleted by. There. Okay. So for oh wait, no, sorry. I did not I should not delete that. It's gonna be here. I'll just hide it instead. Yeah. Okay. Solana, what it's doing is, again, lost the key inflection area, right? Rated all-time highs, lost the key inflection area, came back down towards this range, right? So again, you front ran the range mid, which is normal if you have other forms of confluence around the range mid. So the range mid is here, the dotted black line, but you had a weekly modified demand zone around that range mid, right? So impulse, consolidation, impulse back up. You had a modified demand zone. So all you're doing, you fill the liquidity pocket for now, and you're holding it. For me, if you manage to get an entry based on the fact that you got a close above your liquidity pocket, right? That was a trade. That wasn't a trade I would have personally taken, right? I'm not taking anything until you actually rate the mid or you flip the highs back into support. So for me, Solana is currently at a no trade zone. Okay. If you want to scalp this, you've got three levels here to scalp around based on whether you close above or close below, who shows you an edge around these levels, basically. But if you want to enter Solana, I'd wait for a flip of R5 to R6 again. Okay. Go and flip this area back into support here, right? That would be my size up trigger on Solana to go higher. Okay. If you don't get the flip, if you start to see SFPs here again, we have left head. Here you have a inverted smiley face structure, right? This is not a head and shoulders. This doesn't quantify as a head and shoulders, but you have an inverted smiley face structure nonetheless. That'd be distributive. Okay, so that is why I'm saying I wouldn't personally enter Solana here. In terms of the high time frame play, there is no good risk to reward present at this area. I'd wait for something subtle. Just wait for that to flip, right? Price difference is not going to be that much greater than where we currently are, but your trade entry is going to be so much better. Okay, if you actually get a flip of this, that flip is what I'd enter on, and I would be targeting for Solana. Okay, I'd be targeting 309.61. Right, so we've already rated all-time highs. The next AB equals CD will take us to 309.61, and once again, if this is the low, right? If this does happen to be the low, I have a 578, right? So over there, 578, pretty close to a 618. So that's closer to a 0.618 than is the 0.5. So I'm gonna, for now, just extend this to the 1.618. But let's see, in terms of kind of body close, actually, I'm not gonna put that wave structure down right now. I'm gonna wait for more data to develop here. I'm just gonna go with this. AB equals CD 2.0, right? 309.61. That's what we have. Let's go on the daily to see if we have something cleaner. 1 second. All right, Solana does have on the daily. I forgot to mention this. I was looking at this. We do have an XABCD, a potential XABCD that takes us towards $167 sol, right? So for me, either you flip that low into support, like we were just discussing, to enter sol, or you go and you basically hit the harmonic target and you get bottoming structure put in. Right? Those are the only two ways I'm adding back or sizing up even more on sol. Okay. Otherwise, I'm simply just holding what I currently have. We're still multiples in profits of our original entry. So Solana is literally no stress to us, guys. But this rate here, that'd be a very good trigger for me to size up on or reclaim this level as support here. If you go and put the inverted smiley in, you can hedge a short on Solana. Okay. But we do have, so for example, let me try on the daily instead. What about if we did this? 786, we'll be looking at a 1.272. So that's a potential wave structure on Solana there. And if the actual 886 was to be hit, then you'd have the 1.13 as well, right over here like this. So the point I'm trying to make is, again, as long as this holds, guys, there's going to be new wave structures pointing higher on Sol, just like there is for everything else, right? So on the higher time frame, again, another multitude of reasons why, but just another reason as to why on the higher time frame there is no need to be bearish yet. Okay. I think Solana looks great. Okay, but we currently are. I wouldn't take a trade. But should you get that $167 sold, or should you flip that into support? Those are your two entry models, right? Two entries based on you basically hitting the harmonic or you flipping that key inflection area into support. Otherwise, if you go and turn this key inflection area into resistance, confirm this is resistance, you have the inverted smiley. That's something you would take a hedge short off of. Okay, so that's all. Injective, attempting to put in a absolutely massive smiley face. As long as these levels are held on inch, everything is fine. 16.789 is the line in the sand for me right now. Right? If you get below that, then I would not be interested in injective whatsoever until more data came in. But as long as this is held, you literally have your initial support here. You have your massive, what we consider to be radon liquidity right over here. And then now you're coming, you big sell off simply to reconfirm this area of support. Right? And why is this powerful? Okay, what we're saying with this is, right, if I was to show you aggressive buying that has taken place on injective, yes, is it going to show up? Oh no, this is the crypto chart. It's not going to show up. 1 sec. Inj USDT. Let's look at Binance ones, right? If you look at the aggressive buying that has taken place for injective, right? What you notice is your most aggressive buying came in literally at the peak, right? And this peak was literally the range mid of this historical range right over here. You had a shit ton of aggressive buying coming in, going into this area, right? Why is this significant? Because what we're saying is, look, we've had serious amount of trap traders in this move up. Right? There's a lot of people that have been trapped, that have been caught offside, with this move up. So then those people who open up their buys, their long contracts there, they're going to be instantly offside when this happens, right? They're going to be forced to cover. Them being forced to cover, right, is what generates liquidity now for bigger players, right? Institutions, let's say banks, whatever it is, right? Whales, people whose size means they can't just one clip an order, right? Someone who, if they try to market buy everything at once, would actually just fuck up the order book. People like that then get liquidity generated for them to get their bags filled. Okay? That is literally what this is, right? When we talk about trap traders and liquidity, that's what we're talking about. You induce FOMO, you induce fear to trap traders of opposing sides at range highs and range lows, and then you get them to cover at a ridiculous price after you go against them. That enables big players to get their bags filled. So all the people that were opening here, them covering is what's going to allow for big players to get their bags filled, right? And a cumulative structure like this is simply a footprint, right? It's a form of a footprint of that happening, right? So you clearly have initial support, you've got a raid, and then you drop price all the way back down towards the initial support because that is your optimum price to buy this asset, right? Big players want their optimum buys. Big players don't want to buy injective at resistance at $35 after it's pumped God knows how much percent from the lows, right? They're going to want to buy as close to the bottom as possible. So these players being liquidated, being forced to cover is what generates liquidity for the big players to get their orders filled. And then, the market carries on in its merry way um, after all the shrimps have been liquidated, right? That's it. So as long as this is holding on injective, as long as this is holding, injective looks good for higher. Okay, you literally just had a pullback to 2023 and 2021 12-month key levels, right? If this holds again, you're simply looking for continuation back to the upside. Okay, this looks like a bottoming structure building to me. Okay, so that's injective, and next you're looking for a flip of this and just continuation back to the upside. So that's Inj. Look to ETH, look to BTC, Aptos. Let's take a look at Aptos. Same thing here with Aptos, right? If I was to show you guys where the aggressive buying was coming in for Aptos, Mexi's just tapped. As if they're not showing any buying coming in here. One sec. All right, you will see over here. Let's make this a bit easier for you guys to see. There you go, zoom in a bit. Aggressive buying came in right as we actually went to a big resistance period on Aptos, right? So over here, I got too many zones. Let me make this easier for you guys to see. One sec. Here and here. Let's just leave this on for now. There you go. I'm interested in, do we have any mitigated liquidity pockets from this area? Yeah, there we go. We do. I knew it. There we go. Okay, so this gray box, this is a weekly supply zone in history, impulse, consolidate, carry on back down. And on top of that, we also have a daily bearish order block, right? So you have a supply zone and a daily bearish order block within this area. So let's close that down. Let's close this. Let's get rid of this for now. This chart, there we go. Okay, so Aptos went to mitigated liquidity pockets, right? So you have bearish supply zone and you have a bearish order block. It wasn't actually mitigated. You filled all the liquidity pockets over here. You put in distributive structure, initial resistance, rate on liquidity, reconfirmation resistance, right? And then you had your drop. But if you actually see on the weekly, what the green dots coming in, it's telling you is this telling you there's aggressive market buying going on in Aptos during this move up, right? So again, you have people that's FOMOing into Aptos, just buying aggressively, right? Aggressively market longing. That's right? That's literally the definition of FOMO. Again, market completely goes against them once enough positions are built up because these people being liquidated is what's going to generate liquidity, right? The liquidation of these people being forced to cover lower, generates a shit ton of liquidity. That generated liquidity is going to be used by big players again to get their positions filled. Because otherwise there would not be enough liquidity to get all the positions they want filled, right? And this is going to things like this are going to keep happening until the big players have got their positions filled. Once their position is filled and they're happy with their bags, that's when you get the parabolic run up, right? So you notice again, even though this is a nasty death candle, all you've done is you've gone straight back into a weekly bearish order block, and you're holding the mid of that as support. You've gone into a mitigated liquidity pocket and you're holding it as support. What was once resistance is literally being used as support right now. So even though that is nasty, these people being forced to cover, the big players are going to get their bags filled at an extremely, extremely key area, right? And if this level holds, guess what? That's just another completely valid higher low for Aptos before this thing goes and takes out this high, goes back towards perhaps $16, right? Maybe even 18, 19. It's going to go higher. You're literally at the area where the trend is. There's a weekly order block right over here that you filled. The mitigated liquidity pocket's been filled. So all we need is buy stepping into this area. We don't want this area to be lost, right? You don't want $7.73 to be lost because that was the last higher low that led to this higher high. For the trend to be intact, you don't want to go and raise $7.73. You want buy stepping in here, right? So if you're completely sidelined on Aptos, then you're at an area where you can easily manage your risk for spot. You just layer in, right? Same strategy I've mentioned to you guys before, 20, 40, 40, whatever it is, change the ratios however you want. And if $7.73 ever gets raided, right? Then if you start closing below the zone, just cut. You're gonna lose absolutely fuck all if you're on spot. You're at an area you can manage your risk. So again, if you weren't in the original call, right? If you didn't buy from the September video, and coins like Aptos, Solana, these I've been, I've literally gave signals on these literally February, March of this year, right? Months ahead. So if you scroll up on my channel, you see limits that I gave for them ages ago. If you still not in from all of those, right, even the weekly videos you've been doing, then you're at an opportunity now where you can manage your risk on Aptos. You're at an area where risk can be managed. Okay. You close below this box again, you lose $7.95, so on and so forth. You don't want to be holding this. Right? Very, very simply, stop closing below this, just cut and re-enter should you go and reclaim this level. But just understand you're at an area where you can manage your risk. You're at an area where this is very nice place for a higher low, right? And should this be the top? Should this be the bottom, right? For example, you've got this low to this high. So here you've got basically a 618, right? A 1.618 is going to take you, there you go, $19.43 Aptos, right? Pretty much in between these two 0.5s, up into this seller zone here on the weekly. Let's just understand you're at an area now where you can once again manage your risk. So if you were completely sidelined from the move up from September, right? Like you for example, like you weren't in any of the top tens, or you were sidelined on Aptos, you've been wanting to get some, but you've been patient and holding out. You now have been rewarded for your patience. You're at an area where you can manage your risk on Aptos. You do not need to leverage this. You can buy this on spot. Okay. Aptos is another one that's at a very, very key area right now. As long as this gray box holds, this is a beautiful place for a higher low. So that is Aptos. Let's look at AVAX next. AVAX, again, you've come all the way back down to this gray box here. There's a buyer and a seller zone right next to each other, right? Holding it as support. At the end of the day, as long as you don't go, as long as you're, I mean, one way to look at AVAX, right, as a very, very wide view in the sense of how bullish are you, as long as this red line is held, there's nothing bearish on AVAX. Okay. So you could drop AVAX down to $27 again by January 27th, right? By the end of January, AVAX will be trading at $27 again. You would still be putting in a higher low. Okay. But now in terms of structure, right? In terms of structure, I would not want us getting below $33.17. Why am I saying that? The reason I'm saying that is because that was your last lower high that led to your lower low, right? So I would not want us breaking back below that again. If anything, I want us to stay above this. Okay. But ultimately on AVAX, right, especially for my spot, Again, we're in from, all the way from back here on September, right? So as long as, even if it goes down to 27, we're still going to be up from our entry of September, 32%, right? So there's literally no stress. Stop losses are break even. If you get stopped, you get stopped, right? Otherwise, as long as this level holds, right now on AVAX, I do not want $33.17 being lost, right? That is the line in the sand. I do not want this being lost. That's the last lower high that led to the lower low. As long as this holds, I'm expecting continuation back to the upside for AVAX. But if you do lose that, it's not the end of the world. As long as 27.24 isn't lost, that's the important thing. If you start losing the red line 27.24, that's terrible. Like, no hope, in my opinion, on the higher time frame. You'd be looking for range lows to be rated again, right? I look for AVAX at $17 again, something like that, but to happen. As long as these levels hold, continuation back to the upside is what I'd be looking for. And again, if this is the low, I hate something like a 576 because this. All right, in terms of kind of body closes, is that, you know what? Let's do this one sec. What we have there is a 618. So then a 1.618 would take you on AVAX all the way up to $68. Okay, $68 AVAX if this is the low. So again, very, very easy area to manage your risk. Over here where you currently are, what I'd be doing is if you actually lose 33.17, I'd cut and I'd look for, okay, do you get reaction at $30 or 27? If yes, then you just layer in a bit lower here. If no, then you just weigh in your hands because then you might get even lower prices, right? As long as we do not lose 33.17 for now, like you're literally above your last lower high that is the lower low, right? This would be a beautiful place for a higher low to come in and the continuations back to the upside. So that's AVAX. So many of these coins are giving us really nice opportunities to size up. Right? This is another thing I'm talking about when I say, don't fully position yourself until you've been confirmed trend, right? On the weekly, all AVAX has done since we've talked about it, right? Is you put one higher low in, but you didn't take out the last lower high that led to the lower low. And then you've been slowly going up and up and up. This is your first proper pullback after the move up. So if you're being honest with yourself, this is the first proper high low opportunity we've had. Because I sized up on the daily based on high lows coming in over here, right? Because I recognize that, okay, momentum is on our side. We're flipping key levels. I'm going to size up on the daily to maximize my profits on this move up. But on the weekly, the actual high low is coming in now. On the weekly, we haven't really had a high low. It's just been up and up and up, right? So now, as a swing, remember what I say, 20, 40, 40. If you didn't size up on the daily and you have, let's say, 40% remaining to size up on a weekly high low, this is where you pay attention because these are areas where there's a very high chance weekly high lows could come in. Okay. And if a weekly high low comes in, this is your last opportunity to get a decent size up, right? To be positioned, to size yourself up, get your average up, right? Increase your position size before you go parabolic. Okay. That's AVAX. So you can see again, bullish wave structures are currently like, very potential bullish wave structures forming. It's the same on pretty much every single coin, right? Say you've had a very clear rejection off of that bearish 5.0 that we talked about, right? Back in November. You had your shock, you had your zero point 0.5, you've come back. And once again, say, same thing. I do not want say to lose, right? I do not want say to lose 0.3311. Why? Because that's your last higher low that led to the current higher high, right? If you lose that, you're just talking about a shift in trend, right? Then any lower highs could be devastating, right? But again, as long as you do not lose 0.3717, there's no reason to be talking about 0.3311 because based on this weekly close, we have a weekly buy zone right over here, 0, 0.5, and 1. All we're doing is we keep pulling back to the weekly buy zone and we keep holding it as support. Look, all of these are aggressive selling, okay? If price were to go against them now, these are going to be caught instantly offside and they're going to be forced to cover high, okay? So there's a load of trap shorts. There's going to be there's a load of shorts building up here. There's a load of aggressive selling going on. I would not be surprised if these people get trapped. more often than not, on a higher time frame, people get trapped. Okay. So look, if you're talking longs, right, as long as you don't lose 0.395 or literally where we currently are, don't expect lower. You can literally take a lower time frame scalp long on AVAX, right? You can enter AVAX right now on the daily, and you simply tell yourself if you want really, really tight stop loss, if you lose 0.3954 on, let's say, the 4 hours, right, or something like this, or the 1 hour, I'd go with 4 hours. Then you're gonna cut because then you have a chance of visiting 3717, right? Again, AVAX is a key, not AVAX, sorry, say is a key areas, right? All we need is we need a reclaim of the trend, right? What is the trend? The trend is right over here, right? You can see this trend. This liquidity triangle, as I like to call it, you're below that for now. All we need, we have market shorts coming in at a loss of that. We just need something like this, reclaim, and then I think eventually you just end up selling this higher. If, however, you go back up and you see that this area started to turn into resistance, right? So let's say you go up here and then you see again SFPs closes below the mid, so on and so forth. Then you know you've got inverse smiley face structure, right? Distributive structure. You can try and take a short based off that, right? Because maybe you range some over here before you go higher. That could happen. Right, but very, very clear here, right? On say 0.3954 is your current line in the sand. If you lose that, it's 0.3717. And on the higher time frame, what you do not want to do is grade 0.3311. Because any lower highs that follow that could be devastating. Right. So ideally we just put a lower high in now and just send it. Again, if this is the low, right? If this is the low, then we have a potential. One sec. Instead of that, 886 is right over here. If you have the 886, we have the 1.13, right? The 1.13 would take, say, back up towards 78 cents, basically. Right, so again, if this is the bottom, you have a wave structure taking you up, right? Taking this out. And then who knows, you could massively overshoot this. If the market makers have got their bags filled, there's no reason to just stop here. You could just literally come and send this to new highs. I say, as a swing, what you're doing is if you were to enter here, I'd set DCA to be like basically between 0.37 to this gray box, right? And if you start closing candles beneath 0.3121, that is hard close. So as a swing, you've got a literal, for example, in terms of playing, because people are confused by me simply just using words. This is what I'm talking about. Kind of body close, preferably on the daily. Okay, if you start getting daily to 3 day closes below 3121, okay, below this level, I've just said this at a random area, right? But kind of body closes below 3121, you're going to cut, okay, below this level here, 0.3121. You start getting daily kind of body closes below, you no point holding this. Okay, and even if you target just the D point, that is still a 3.47 on a trade. Okay, up to new highs, ABCD targets, so on and so forth, that becomes 7.89. Including DCAs, of course, your risk to reward becomes better. But again, on the weekly now, right, this becomes a potential high low coming in, right? You are areas where high lows could come in. So until like structure is lost, please don't just be like, I'm not going to buy here. It looks so bearish, right? Having red candles doesn't mean bearishness. Okay, red candles is an opportunity. What's being bearish means the structure tells you you're bearish. If the structure hasn't flipped bearish, um, that's what I mean. It's an opportunity. It's an opportunity to bid. So that's say look at Sui literally so damn bullish. This thing's just not affected whatsoever. You retested your daily seller zone area here, right? Or the weekly. If you look at it, yeah, your weekly seller zone, flip to support, your weekly buyer zone, mid, flip to support. There's nothing else to say here, right? So next entry on say, if you wanted to try and look for a scalp long, if you flip 4.32 into support, look for a lower time frame swing long. Sorry, look for a lower time frame long back towards like basically $5. That's it. I stay extremely, extremely bullish. This hasn't even had like a serious pullback, right? So I'm not going to be adding to my say bags here. I'm already happy with the bag that I have. Again, we entered this based off the harmonic setup video. I want a deeper pullback if I wanted to actually like, average up, right? So for me, I'm not doing anything with this. But say he's literally just flipping resistance to support. I won't be surprised if this goes and puts in a new high. And last but not least, the final coin in our top 10 is Ondo. Same thing with Ondo. Broke out of all-time highs, and now you're retesting all-time highs. Right? If you look at this on a monthly, for example, or the 3 months or something like this, here's your 3 month seller zone in the white, right? 3 months slash 6 months, right? There's a 6 month seller zone in white right there, right? Your 6 month seller zone mid is literally being flipped to support. So as long as the top half of this is being flipped to support, what he's saying is an area where sellers used to be active is now in areas where buyers are trying to take control. I'd expect a flip here next and then just send it back up. Local smiley face and carry on sending Ondo back to the upside. Right? Ondo, that's an area where you can manage your risk. Okay, I'll wait for the daily to close. Right over here. I'll wait for the daily to close. And then simply just put like if you decide to then layer in after the daily closes, you can literally just cut if you start closing below the 0.5. Okay. Keep you very tight. And if you reclaim that 0.5 at any point in the future, just simply react. It's all happening around key levels. Right. But you can see even in our top 10, if you've got opportunities now to like, if you missed the original leg up, you've got opportunities to, yes, your entry is still not going to be as optimal as if you'd entered back in September. Right. But that's the risk you take. If you don't enter when no one wants to enter, you're gonna have to enter when everyone wants to enter. When everyone wants to enter, price is going to be higher. Right. So that's the trade-off. But now you're at an opportunity where, like, it's not like you're buying the top, right? You've had pullbacks, you're back at key areas where it makes sense to manage your risk. Um, so you, as long as you're in this area and you can manage your risk at this area, that's the important thing. Okay. Now, Hype is another one that I'm looking at personally. I want to, since they announced another round of airdrops, I'm going to be doing a challenge account on this. But yeah, this one, nothing much to say for now. Not a call or anything. Just I'll update if anything interesting happens with Hype. But that's the top 10, right? That's the top 10. It's been a while since we've had entry opportunities on the top 10. So let's take a look. Link, yeah, Link looks good. This is where we are. Link literally went to as it's still retesting. It's uh, yeah, Link retesting its key inflection area right so here. Plus, it's at the mid of this seller zone here. I believe that's on a monthly. Yeah, monthly seller zone. You're struggling around the mid for now. But above this key inflection area, Link's going to carry on going high. Right, look, every time you've been above this, up. If you get below the mid, then I'll be looking for this blue box to get filled. So, yeah, bro, Vanry does. I've got two different charts for Vanry. Vanry. So yeah, there's the crypto chart that I look at here, which is where I do which is where that fib data was put in, and then this is where I do the local, more local stuff. So this on Binance. But the crypto one won't give me like the aggressive buying and selling taking place and stuff. So I just do it between the two. Um, think of Tau. Let's take a look at Tau. Uh, Tau needs a complete upheaval. I need to redo this chart. It's been a while. Rated highs came down. I think at range lows. If you're looking at this as a range, Tau is very clearly at range lows right now. Yeah, well, that's not going to get filled, is it? Let's be honest. Would have been really nice, but that's what it is. That was a good short. That's a while ago, though. Get rid of that. I mean, for Tau, it's if you want to enter spot, I don't think it could get any simpler than this, to be honest. Something like this, perhaps. Okay. I didn't even have to like pull anything up. It's very clearly at a range, right? You have range lows, high volume sell candle into the range lows. Any trap traders, aggressive selling taking place at the lows, right? In terms of risk to reward, it's easy to manage your risk here, and that's for sure. For Tau, yeah, yeah, something like this, bro. For Tau, if you wanted to enter some spot, that's a very easily manageable area. And what you can also do if you wanted to DCA is here's your weekly buy zone. If you enter here, I'd set a DCA for this lower half somewhere, right? And if you do that, your risk to reward becomes infinitely better. And if you don't get the DCA, just wait until local resistance gets flipped to support. Right? Where's your local resistance? In this case, something like this. You can see anytime you're above this, you go much higher. Right? So just wait for local resistance to get flipped to support to size up or DCA. Very simple. But yeah, I think AI will do well. I'm in PAL still. PAAL. Yeah, M shape's building back up again, bro, for sure. Oh, you guys play Rivals? The Rivals is fun. Link, yeah, sure, Blue. Let's take a look at Link. Okay, I'll do Link. I'll just show you guys Link real quick, and then I'll call it a day here, guys. I'm starting to get really ill. Got a headache. Yeah, here's Link, bro. As long as you're holding $20.80 as support, $20.80 to $21.25, I expect to move back up towards 27 eventually. You got a pit stop at $22.87, but above this, honestly, don't have anything until this area here again. If you get below $20.80, however, I'm looking at anywhere between $19.18 to $18.56, right? And if you turn that into resistance, $16.39. Lose $16.39, then you have this area between $15.10 to $13.45 per link. Brilliant. That's brilliant. Yeah, no problem. But anyway, guys, I'm gonna end this stream here. Thank you very much for for your time. If you guys need anything from me, like you want me to like chart coin for you or whatever, just tag me in crypto chat. Let me go and stop the